Recently, Indian market started correcting because FIIs have shorted India to the extent of 8,293 crores of shares, and this fund started moving towards China. China is the second largest economy after US. So, it's not only US, even when China sneezes, then the rest of the world catches cold. So, in this video, let us see what is happening in China. As an NRI investor, should you be considering increasing the holding if you already have started investing, or take an exposure in China? We will discuss all of that. So stay tuned till the end. If you are new to this channel, I am CS Keerthana. I live in Dubai, and I run the consultancy, a firm which is specialized in NRI services. We offer NRI finance, tax, as well as investment related services. If you're looking for any of this, please feel free to visit our website www.keerthisfinfo.com and book your appointment. I've completed my CS from India and CIMA strategic level from UK. I'm also an overseas SEBI registered MFT. Every week I bring and explain a video related to NRI issues on this channel. If you're looking for these topics, then please subscribe this channel and share it in your friend circle. So now let's see what happened in China and why it happened. China was experiencing deflation. Deflation is an opposite for inflation, where public does not like to spend much, and as a result, demand for the goods and services start plummeting, and even the price as an end result starts diminishing. If you're thinking, isn't it better than inflation? Let me tell you, even Japan has taken decades to overcome from the problem of deflation. When public feel that they should just save and they can't trust any investment vehicle, it's really bad for any economy. Chinese economy struggled to reach 5% growth rate. The real estate, which held 70% of public saving and contributed 30% of GDP, was crashing. Even 80% of the government spending that used to come from local governments, which actually had real estate as a cash engine, were suffering. The international investors started believing in China plus theory. So, government had to do something. But in the first place, let's see what has caused deflation in China. The main reason, according to me, is confused government policies which affected the confidence of both foreign and domestic investors, lack of vision, excessive interference. I'll explain everything in detail. See, in China, they wanted to be an investment-led country, not export-dependent country. But how to achieve? They had no clarity. To give example of these confused policy implementations, let me tell you how they have handled the growth and recovery strategy after 2008 crisis as well as COVID crisis. If you think China just exported virus but they did not suffer like rest of the world during COVID, you are wrong. They took the worst hit after COVID. In fact, they adopted lot of measures, and once they opened the economy, again they realized that they are wrong. So they implemented zero COVID policy with prolonged lockdown. This has caused heavy disruption in China's manufacturing and exports. Such repetitive lockdowns had literally made for the small and medium scale industries there to struggle for their survival. So in 2022, China suddenly abandoned its zero COVID policy because there was so much economic cost associated with that. But on the other hand, this led to spike in infections. Again, they had to close the door and economic activity suffered again. Such frequent infections, unpredictable lockdowns made companies to think of alternative option than China, because you can't risk losing top line revenue due to the supply chain bottleneck, right? Such less movement and economic activity made every asset class, including real estate in China, less attractive. Even after 2008 crisis, China believed that if they want to stimulate the growth, then there is only one way, that is to support real estate. They wanted to be investment-led country and reduce the dependence on export. So how to push this urbanization and create more and more jobs and create domestic consumption? By boosting the real estate. So they believed that there is one powerful engine which can actually restart the economy. It is real estate. Now this is on the government level. Even at an individual level, for people in China, owning real estate was always a status symbol, and they always believed that the property price will multiply forever. Like us Indians, even in China, real estate ownership is a prerequisite for marriage. It is considered as a status symbol. And as such, with limited investment options, because stock market investment is not so vibrant like US, people were mobilizing saving in real estate. And on the other hand, even government also started pumping more and more money, building inventory to accommodate the rural migrants in real estate. When the demand at public, private, government level increased, even the local government saw this as a huge opportunity, started promoting property development. Land sale revenue itself became very important revenue source for the local governments. So this kind of oversupply has to result somewhere. So this had led to something called as ghost city, where you would find a lot of empty building real estate properties with nil occupancy, because such an oversupply of asset always leads to asset bubble. The speculative buying of real estate, because everybody believed that it's going to have price increase forever, created bubble in real estate in China. Banks too had lent heavily to real estate developers under different complex structure, and when the demand started slowing down in real estate, the developers could not service the debt or pay the interest or even pay back the principal amount. Now understand the interconnection. Local government, public saving, bank, everyone's capital is locked in real estate, which started slowing down in China, and this financial contagion slowly started spreading in their economy. Now if you're thinking this should have ideally led to something like 2008 kind of crisis, why didn't it happen? Because of government interference. All of a sudden, China government felt that it had to interfere and it announced series of stimulus. It lowered mortgage rate by 0.5%. Just imagine what 0.5% can do. It has saved 150 billion yuan. Just look at the sheer size of China's economy. And the government also reduced the down payment requirement in real estate sector from 20 to 15%. The government also had reduced the cash reserve ratio, or the amount of the cash that is required to be held by the banks. Now this move had released 1 trillion yuan. This can be now lent or available to be given as a loan by the banks. Even the interbank rate at which the lending happens in the money market, where banks do lending with each other, even this rate was lowered. That means the cost of borrowing, which is actually the interest part, is also made lower. The last point is where People's Bank of China had announced 500 billion yuan support to the institutional investors to buy stocks. This was a master stroke. This impressed FIIs a lot, as a result of which funds started moving towards China. And to add this, 300 billion yuan was announced to assist buyback of the shares of the companies, so their stock price gets some breathing space. If you don't know what buyback is, let me tell you. Just imagine you are running a business, you are a business owner, and I'm going to tell you, hey, I will give you an extra cash support to buy back your own shares from the market. So what happens? The supply of the shares in the market reduces, which will boost the stock price. So this is how temporarily the stock price can be manipulated. There are many genuine reasons why companies do buyback, but these kind of measures I'm dead against, because they do more harm than good. But we know China is very good at copying, right? You know whom are they copying? They copied what US had exactly done in 2008. US, after 2008 crisis, it had announced something called TARP, Troubled Asset Relief Program, where they have infused $750 billion of economy in the same way. So this had led to asset inflation also. China had decided if US could protect itself from such packages, why not China? So it just executed the same strategy that was adopted by US in 2008 by announcing huge stimulus on mass, multiple scale. The second reason which I mentioned was confused policy or policy paralysis. Political control over everything in an economy is not good. China wanted to implement two-child policy and executed it ruthlessly earlier. Now they feel that aging population can threaten the growth of economy. So all of a sudden government started spreading awareness about why every family should have 3 kids. They even sent authorities asking why, when or whether couple are planning to have kids, though it is actually invasive. Same happened with COVID. Zero COVID policy led to frequent lockdowns when manufacturing, export, tourism, everything plummeted. Then they opened up, which led to infection surge and caused lot of unpredictability. Now if you see, many are expecting that China might infuse another 1 trillion yuan on construction projects or boosting consumption in their economy, and set aside another 1 trillion yuan just to recapitalize the banks. There is also plan to issue 10 trillion yuan bonds to fund this public work or infrastructure which is required. Now, just think, this kind of debt financed stimulus, how does it even work? How can these can give support to the economy? Who is going to pump money in the first place? FIIs? I don't think so. When they don't buy bonds, then it is only domestic institutional investors or DIIs such as insurance, banks, pension houses which are going to pump money into these bonds to fund the government work, but ultimately burdening their balance sheet. Again, at the end, what is going to be the result? The public whose hard earned money or saving which is linked to these insurance, pension houses is going to be endangered. They will risk losing its value. Again, deflation might reappear in the economy. Now there is support for buyback, but where the real growth of stock price should come from? Is it just from this stimulus or buybacks or corporate earnings? See, let me tell you, capitalism or free play is necessary for any business to flourish. The government in China literally projected that it is seen to be a billionaire in China. Tech crackdowns had dented its image. Jack Ma started getting critical of government and government just went after Alibaba. We all know what has happened to him. Even recent profit warning by PDD shows that how much fear is existing in the minds of business owners. Nobody wants the tag of getting rich or millionaire because they fear their licenses can be cancelled, authorities may start haunting them. So instead of guidance on profit in China, we see literally profit warning by China's business owners. Is it good for any economy? Just imagine, in 2023 alone, 15,000 millionaires have left China. So now, considering all the factors, as an NRI investor, I know that diversification is very much necessary in today's time, but before adopting such diversification strategy, you must note that allocate the significant portion of your portfolio in a country where macro is stable. Whether the economy getting oxygen support by reducing interest rate or the growth is coming from just injecting such kind of liquidity measures, you should be tracking. Where startup ecosystem thrives, where wealth creation is not seen, where saving is actually not controlled, manipulated but mobilized to a productive asset, where public loves to consume and government also infuses capex or capital expenditure. This is a country where your money has to go. So it is not the debt-induced stimulus or cheap loans or lesser interest rate which should make the economy to expand, but the consumption. If you apply all these parameters, then definitely in China you can just take short-term exposure, not a long-term bet. If you know how to book the profit only, again the short-term game is for you. But before taking the long-term exposure, please apply all the parameters that I've just explained and then decide the size of your investment. So, in case if you have invested in India, you don't have to panic looking at the correction. In case if you want to invest in China, consider all these factors and then decide what should be the proportion which should be going towards China. I hope I could give you some inputs for the decision making in this video. In case if you have any different perspective, please feel free to share this in the comment section. See you next week with another interesting video. Till then, bye-bye.